Hello traders, this is the second weekly video about the bigger picture. It's going to be a short one because nothing much actually changed on DAX in the bigger picture. It is still in the range, it is a 3-week range, moving averages are still holding, and this is here on the upside June high. Still no upside follow through there, and on the low side of things, daily 50 held the price again, same like in June. Now, if we compare DAX, this is the chart that I gave you on Friday. If we compare DAX with Stoxx 600 or Stoxx 50, all of these are not back-adjusted futures charts. You can observe how on Stoxx 600 and Stoxx 50 there were some highs here in March, while DAX in March was here. Also that they have here literally 3-month consolidation periods, May, June and July. But all three of them also are having this upsloping channel. Generally speaking, all of these markets are in consolidation modes, and here both on Stoxx 600 and on Stoxx 50 you can also observe uptrust. When you position your cursor here, there was a test of the resistance down, uptrust down. Also here there was uptrust and down. So springs and upthrusts can work on all given time frames. Now let's observe DAX on a weekly chart. This is regular normal weekly chart. This here would be that 3-week range, but also you could say that DAX is in 4-week upsloping channel, pressuring that June high, and that 3 weeks in a row we had only tests of June high or tails or breakout attempts above which failed. However, we are still having a higher low behind our back, and this could very much look like one of our usual patterns, which would be up, zigzagging in the upsloping channel, then either this channel breaks, in which case we're likely going to see lower end of this structure, or it actually breaks up and we got exhaustion move into the uncharted territory. Another DAX weekly chart can be this one. This is a logarithmic one, which I used in this weekly video from June the 1st, after which market made more than 1,400 points pullback. The video was is DAX overbought, because here we had enough of a technical reason to suspect a potential pullback. That pullback then hit daily 50, and it was the June OPEX swing low, and this is also one of the way how we can watch this consolidation. This here would be another test if market goes higher, while this here marks the June OPEX low. And if we compare DAX with the US markets, we can observe these 3 or 4 weeks on them, how they are looking different than on DAX. That S&P is having a pretty strong looking weekly candle, and you see what they did here, like a rally, base rally, then again rally, base rally. This was the breakout from the 2-week balance, which made new all-time highs, and then they just continued higher. This is Nasdaq, also looking strong, also grinding higher, and then a market which looks pretty much like DAX, that would be Dow Jones, and I think the market to watch, because you see that they made literally a 4-week consolidation below the all-time high, and here we could get a few scenarios. One would be obviously to make a breakout to new all-time highs. The second one would be false break and going down inside that 4-week range, and the third one would be a breakdown of a 4-week range. And here you can also see that pattern, which will be up, zigzagging, because this was also a channel like this. So up, zigzag, up, exhaustion. This time was exhaustion into previous all-time high. And this would be Russell, which is also having a consolidation. So basically Russell, Dow Jones, DAX in consolidation, while Nasdaq a leading market, S&P as well, strong weekly candle. this is also something that is making this large time frame analysis a bit harder, because on one side we have these two strong US markets that are making new all-time highs every other day, while DAX is still in the range. But again, DAX made much more on year-to-date basis of gains in percentage than S&P, so it can be in range, and maybe those bigger players are here, going from DAX to these other markets which are going higher. In any case, our breakout and breakdown point is the same. Breakout point is above June high, with first target would be all-time high, then a new all-time highs in the uncharted territory, while the real deal for DAX bears would be breakdown below daily 50. As long as daily 50 and daily 20 are holding, market can just pressure this upper end and at the end to grind higher. However, this consolidation can obviously play for more time and can morph into a megaphone, which is something that DAX already did a few times in the past. So again, as long as this inside this range, we could be on higher time frames neutral, while on lower time frames neutral, breakout dependent, and after good tips from the market or showing hands from the market, we could be neutral bearish or neutral bullish on a daily time frame. But to actually, for this market to actually make a directional move, it has to break this area to the upside or this area here to the downside. Until then, we are trading the range. So that would be it in this bigger picture edition of DAX weekly videos. And as always, I wish you a pleasant weekend and good trading.